I want to make you some money.
The energy landscape in California is undergoing a massive, multi-year transformation, and Pacific Gas and Electric, PG&E, is at the center of this shift. If you are looking at the company today, it is helpful to understand the reality of its current position, the scale of the investment it is managing, and the factors that are driving its future growth. The $15 billion investment in grid modernization. In early 2025, the U.S. Department of Energy, DOE, finalized a $15 billion loan guarantee for PG&E. This is not a gift or a handout from the California government, but a significant federal financing arrangement designed to support the modernization of California's energy infrastructure. The goal of this capital is to finance a massive portfolio of projects including hydropower refurbishment, retooling and upgrading PG&E's extensive hydroelectric fleet, which includes 61 powerhouses and provides a critical foundation of clean, reliable power for millions of homes. Grid resilience and transmission. Enhancing transmission capacity and deploying advanced sensors to manage two-way power flow, which is essential for handling the increasing integration of renewable energy. Battery storage expansion. Expanding battery energy storage systems to help manage the intermittent nature of renewable power and ensure grid stability during peak demand. Growth drivers, EV infrastructure, and AI. The demand for electricity in California is poised for significant growth, driven by two major trends. Electrification of transportation. PG&E is actively working to support the rapid adoption of electric vehicles, EVs. The company is not only electrifying its own fleet of 9,500 vehicles, but is also developing innovative solutions, such as curbside charging and streetlight-based charging hubs, to solve charging access barriers for renters and multifamily housing residents. As EV adoption rises, the demand for the power PG&E supplies naturally increases. The AI and data center demand, artificial intelligence is driving an unprecedented surge in electricity demand, as hyperscalers and data centers require massive amounts of reliable power. Utilities that can provide reliable, clean energy infrastructure are in a unique position to benefit from this productivity wave, as AI-driven facilities require consistent and scalable power solutions. Understanding the stock and investment outlook. When considering an investment, it is important to look at the full picture of the company's current status. Market valuation. While you may see reports of the stock trading at lower levels, it is important to distinguish between price and value. As of July 2026, the stock has been trading in a range that has recently seen some analysts maintain buy ratings, while others hold a more cautious hold outlook. It is not currently at an all-time low in the context of its long-term history, though it has experienced significant volatility following its 2019-2020 bankruptcy. A growth utility. Analysts note that PG&E is entering a period of significant potential growth, with plans to invest more than $14 billion annually on average through 2030. This is driven by the state's ambitious decarbonization goals, which require massive infrastructure investment. Regulatory and operational risks. It is crucial to be aware that PG&E continues to operate under intense regulatory and public scrutiny. The state's strict liability standards for wildfires remain a significant concern for investors, and the company's ability to execute its growth plan depends on successfully navigating these risks and maintaining constructive relationships with regulators. Summary for investors. The opportunity at PG&E is built on the reality that California's transition to clean energy, the growth of AI, and the electrification of transportation require massive, sustained investment in grid infrastructure, a role that PG&E is uniquely positioned to play. However, this is a complex, long-term play. Success for the company and its investors hinges on its ability to manage these multi-billion-dollar projects while simultaneously addressing the significant regulatory and operational challenges inherent in being the largest utility in the state.
This is not financial advice. This is entertainment only. Always remember, do your own DD.